Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. Well, surprise, surprise, Tesla posted record production and delivery numbers in Q4 2020, once again blowing everyone away. Despite a pandemic, Tesla achieved their full year 2020 goal of producing and delivering 500,000 vehicles. A truly incredible feat, yet not surprising to anyone who understands Tesla. In this video, I'll share my predictions and what to look out for. I'll talk about what it means for Tesla's Q4 and full year 2020 earnings, profitability, potential impact on Tesla's stock price, and more. If you own or are interested in Tesla stock, stick around. This is Tesla's first earnings report since joining the S&P 500 index, and all eyes will be on Tesla. To those of us with our finger on the pulse, Tesla's record production and delivery numbers were inevitable, and mark my words, every single quarter for years to come will see a new record for both production and deliveries, yet Wall Street still widely underestimates what's to come from Tesla. This has been a recurring theme. Wall Street doubts Tesla. Tesla beats expectations. Wall Street continues to doubt Tesla. Tesla beats expectations. Repeat. I'm not sure how long this farcical situation will last. Surely the market will eventually wake up to how fast Tesla is moving, how quickly their lead is accelerating, how superior their technology and pace of innovation, and how much bigger the average brain of a Tesla engineer is. But until then, Tesla will continue to surprise on the upside, and Tesla's Q4 and full year 2020 financial results will be no exception. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. Tesla is maintaining market share and growing production. Tesla has maintained a global electric vehicle market share of about 18% throughout 2020. Most expected to see Tesla lose share to the hundreds of so-called competing electric vehicles, yet the early indication is that Tesla will maintain around a 20% slice of new EV sales, providing they can ramp production at least as fast as the global EV market grows. Expect updates on Tesla's total production capacity at Fremont and Shanghai, and more importantly, updated timing on when the Berlin and Austin factories, which are both currently under construction, will be completed and begin production. It seems that most of Wall Street is asleep at the wheel on this, so let me be very clear. Gigafactory Berlin will be completed around mid-year, Austin not long after, and both factories will begin ramping production in the second half of 2021. Yes, by the end of this year, Tesla will be delivering vehicles produced in Fremont, Shanghai, Berlin, and Austin, and I don't believe the stock market is expecting this. What Tesla tells us on their earnings call about current and future production capacity matters a lot, and I suspect the stock market will react very positively, at least if they're wise enough to actually believe what Tesla says they plan to do. Printing money and expanding markets. Model Y sells for $4,000 more than the equivalent Model 3 does. Unsurprising given it's about 10% larger, but Tesla has already told us Model Y is actually cheaper to manufacture than Model 3, thanks to boundless innovation, refinement, simplification, and improvement in manufacturing processes, including the octo-valve heat pump and gigantic gigacasting. This means fat profit margins, but it gets better. Tesla is now integrating many of those same improvements in the Model 3, which means higher margins on those as well. And in case you haven't noticed, Tesla continues to find new ways to do more with less, and as a result can keep driving prices down or enjoy even healthier margins, or both. This is a perpetual process. I want to stress this point, particularly to the boneheads who think a price cut can only mean one thing: no demand. Tesla's mission is to accelerate the world's transition to sustainable energy. This means scaling production, driving costs down, and passing those cost savings on to consumers. This is a never-ending process. I suspect that Tesla is ultimately aiming to maintain margins of around 30% on its vehicles while driving prices into the ground and dramatically expanding its addressable market. Remember, vehicle demand does not scale linearly with price. Each small price reduction dramatically expands Tesla's addressable market. Keep an eye on Tesla's gross automotive margins as they march steadily towards 30%. Production and deliveries. Tesla produced 179,757 vehicles and delivered 180,570 vehicles in Q4 2020. Both records, and neither a surprise to anyone paying attention. This means it's all but inevitable we'll see record revenue, record profitability, and record free cash flow as a result. It's not complicated. Sell more Teslas, make more money. Cash on hand and profitability. Tesla has officially become a money printing and capital raising machine. But don't tell the Tesla Q dummies who still think they can't make a profit. They finished Q3 2020 with over $14 billion in cash, also known as a metric shit ton. Since then, they've also sold around $5 billion in stock, creating a war chest of around $20 billion. $20 billion. I mean, dude, that is a lot of money. Enough to survive a catastrophe or three. Enough to acquire talent and technology. Enough to invest heavily in R&D, build half a dozen new factories, and plenty more. I expect Tesla will produce on the order of $1.5 billion in free cash flow this quarter, resulting in a mountain of cash. Tesla's biggest challenge now is spending the money. I mean, really, with two enormous factories currently under construction, Austin and Berlin, continued expansion at Shanghai, and improvements at Fremont, it's hard to see how Tesla could be moving any faster. There's only so many great engineers out there. Moving forward, Tesla's biggest challenge may be avoiding the accumulation of excess cash. Tough problem to have. Full self-driving and other software revenue. As Tesla creeps incrementally closer to solving fully autonomous driving and releasing new features to the fleet, including the epic and ever-improving FSD beta, they incrementally recognize more revenue on prior sales of the FSD package. No doubt, the take rate on the now $10,000 full self-driving package, which has been steadily increasing in price all year, continues to increase in line with its functionality. This package, being software, is almost pure profit. So too the over-the-air upgrades like acceleration increases, heated seats, and so on. As time goes on, Tesla continues to turn on more high-margin software revenue, and we'll see more of this in Q4. Tesla's software revenue over time will utterly transform the company. As analysts recognize this, expect price target upgrades. Zero-emission vehicle credits. As I've mentioned previously, every vehicle Tesla produces gives off a waste product that Tesla can't use, but other companies will pay big bucks for. Zero-emission vehicle credits. I'm not even kidding when I say other automakers are paying Tesla hundreds of millions, in some cases billions of dollars, to buy these waste products. Tesla doesn't need them to avoid fines because they only make emission-free vehicles. Other automakers, however, are struggling to make enough electric vehicles to avoid enormous fines, and so they're buying these ZEV credits from Tesla. Yes, Tesla's competition is literally paying Tesla to build gigafactories. ZEV credits are literally free money, and until legacy automakers can get their shit together, expect Tesla to continue to make hundreds of millions of pure margin revenue selling ZEV credits to competitors every quarter. What a world we live in. And to the three dingbats ready to tell me how Tesla can't make a profit without selling credits, please think a little deeper about how finances are managed within multi-billion-dollar companies, and then think some more, even if it hurts, about the fact that Tesla could actually be taking actions based on their knowledge of the current availability of cash from these credit sales. You know, like spending the money to accelerate their mission because they already have too much cash and would rather scale production than please basement-dwelling Tesla shorts, logically impaired analysts, and deluded bears who somehow think a temporary source of revenue should be completely disregarded, even if it's enough to build a new factory or two every year and shows no signs of slowing. Tesla will likely provide some insight into their expectations for ZEV credit revenue in 2021. They may guide for growth or decline, but either way, it's all free money. Solar deployments. Today, solar is a blip on Tesla's radar, but in Q3 2020, Tesla began a strong push towards solar, with Tesla featuring solar on their website homepage rather than a vehicle for most of the last 6 months. Tesla also claims to have the cheapest solar in the United States. Not a bad selling point. With an average solar glass roof sale price around that of an entry-level Model 3, it's only a matter of time before solar revenue explodes. The limiting factor is Tesla's ability to ramp production and find installers, which is happening as we speak. Keep a close eye on solar in Tesla's financial results. Battery deployments. Tesla's battery business continues to go from strength to strength. We've seen recent price cuts and a number of new large-scale storage projects announced. Given the lumpy and unpredictable nature of storage, I mean, one project alone could be 10, 20, or 100 times bigger than the average. It's hard to know what to expect for Q4, but like solar, it's only a matter of time before an inevitable explosion in growth. It seems every other day a new big battery project is announced. China. Tesla is dominating China. Not only are their highly profitable made-in-China Model 3s selling like hotcakes and now being exported to other regions, but after a 30% price reduction, the newly released made-in-China Model Y apparently saw orders in excess of 100,000 units in a single day. Whichever way you slice it, Tesla is slaying it in China, and with lower parts and labor costs, expect China to continue to drive Tesla's growth and profitability moving forward. Guidance. This is what it's all about. Guidance. Nothing Tesla tells us about Q4 and full year 2020 should come as a surprise. It's all history. In the past, it shouldn't move the needle. It's already done. But maybe you've noticed, Tesla does what they say they will do. Sometimes they're a little late, although lately the reverse is true as they seem to be under-promising and over-delivering. So the most important thing in Tesla's Q4 and full year 2020 results is their future guidance in terms of production, new products, new factories, and more. Whether or not the wider stock market believes Tesla is another matter, but my advice is to take them at their word. Tesla will not guide for anything they're not both aiming for and able to achieve. The most important of all will be Tesla's 2021 full year production and delivery guidance. I expect Tesla will guide to deliver comfortably in excess of 850,000 units, which is way more than Wall Street's current expectations. But internally, I believe Tesla will be aiming to crush that number by aiming for 1 million vehicles produced. With 2 new factories currently under construction and new technology involved, we have 2 enormous wildcards. Any production from Berlin and Austin should be seen as a bonus, but should things ramp relatively smoothly, we could easily see these 2 factories contribute in a meaningful way in the second half of 2021. There's potential for Tesla to surprise enormously to the upside. The most important takeaway from the earnings call will be 2021 delivery and production guidance. No ifs, ands, or buts. This is the thing most likely to impact Tesla's stock price coming out of the call. That is, of course, if the market actually believes Tesla. But I also expect Tesla will provide some guidance and insight around a number of other important factors. Don't be surprised if Tesla shares updates on the Berlin and Austin timelines, Shanghai and Fremont expansion, tells us they'll unveil new products later this year, e.g. the China compact car, European hatchback, provide updates on Cybertruck, Semi, Plaid Model S, the 4680 cells, and even the new Roadster. And wait for it, maybe we'll even hear about plans for further expansion into markets like India, and possibly even a hint about the next factory location. Nothing but good will come from these, so pay very close attention to Tesla's guidance about production, products, and technology. Conclusion. Q4 and full year 2020 will be a blowout for Tesla, chock full of records, including record production and record deliveries, which we already knew about, record revenue, record cash on hand, and record profit. And you know what? These records will only last 3 months before they're smashed again in Q1. Tesla is growing rapidly, becoming more efficient, driving costs down, increasing margins, expanding their global footprint, embarrassing everyone trying to compete, running circles around legacy automakers, gaining massive market share, banking billions, expanding while others contract, and doing nothing but a whole lot of winning. We're witnessing the end of the ice age at the hands of Tesla. And finally, Wall Street is starting to recognize what's been obvious to others for some time. Tesla has won the decade. It's now just a matter of watching this play out. And with Tesla's recent S&P 500 inclusion, there will be more eyes on Tesla than ever before. Remember, the single most important thing to look for is Tesla's 2021 production and delivery guidance. And speaking of, what's your prediction? Let me know in the comments below how many vehicles you think Tesla will guide to produce and deliver in 2021. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.